NIO Stock is absolutely on fire right now, and a lot of you have been asking me to share my opinion on it because, of course, the stock is up over 460% in just the past few months alone. Now, by the time you guys watch this video, the stock may have crashed back down or it might still be climbing. It's pretty hard to tell because this is a very volatile stock, and of course, just the market in general is pretty questionable at this point as well. But in today's video, I want to examine why the stock has been climbing by so much recently, and I also want to break down both a bearish and bullish viewpoint on it to see if we can kind of guess where this stock might be headed in the future and if it's a stock worth buying even at today's prices, or if it's just overvalued and I should be staying away. So we're going to talk about all those different things and more in today's video. Should be a fun one. I hope you guys enjoy this, but let's go ahead and get started. What's up everyone, my name is Ale. Welcome back to my world of stocks. Okay, let's go ahead and start by taking a quick look at why the stock has surged by so much recently, and then we'll break down a couple different viewpoints, and of course I'll let you know what I plan to do myself going forward. Okay, now if you don't really know anything about NIO, the quick summary is that it's essentially this sort of Tesla-like startup out in China that makes high-performance luxury electric vehicles that also come with very impressive autonomous driving functionality and even offer certain features that not even Tesla offers, like their battery swap technology, for example. Those vehicles, though, range from their larger, higher-priced flagship, the ES8 SUV, to the smaller, more affordable options like the ES6 crossover SUV and the newest EC6 coupe SUV. And being that China is the largest market in the world for electric vehicles, the hype surrounding NIO led to the stock surging after its IPO to over $10 a share before turning into a wild roller coaster ride, mostly trending downward for the next couple of years, hitting as low as just about $1 per share. That is until just very recently though, where the stock shot up like a rocket, climbing by over 460% in just the past 3 months alone, leaving it up close to 300% year to date, at one point even breaking north of $15 a share to reach a new record high. So why did this happen? Well, the poor performance was initially due to the deteriorating Chinese economy that sent auto sales plummeting for years, a phenomenon that not even the newer EV market was immune to, particularly towards the end of 2019 and going into 2020, where the global health issue that originated in that country only made things worse. As a result, you can see on this chart here that NIO's quarterly auto sales were surging in 2018, but later saw a heavy decline in 2019, then rebounded a little at the end of that year, but was still relatively flat year over year, which is obviously not good for such a new startup that should be seeing explosive growth especially in the early stages of their business. And then with the global health issue kicking in, those deliveries crashed once again in Q1 of this year and was even down year over year. That is until the most recent quarter, where despite the global health issue completely disrupting China's economy and the EV market to go along with it, NIO was able to not only post a recovery quarter, but it was actually a new record for the company as they recorded their highest delivery quarter in history at over 10,000 vehicles. Again, pretty impressive given the context of all the chaos that's going on right now. In fact, throwing those numbers up on our chart, we can see that it was explosive growth of about 170% quarter over quarter and almost 200% year over year. That's very impressive and important because it should also translate to solid financials for the quarter, as deliveries even beat the highest end of their projections, leading to their CFO stating in the deliveries report that they are confident in meeting their goals on gross margin and operational efficiency for the quarter, although we'll obviously have to wait for the exact numbers to come out, which will probably be in mid-August. Still, there are many other, positives that I believe are driving the stock higher. For one, the amazingly strong quarter means that China is likely seeing at least some sort of economic recovery from the global health issue, while it also shows us that the large investments that NIO made last year into growing their sales network and their brand recognition is actually paying off, which a lot of the bears were skeptical of and kept insisting that NIO was just burning through their cash with no real purpose. But NIO's move to shift away from too many NIO houses, which are these like overly expensive large areas that NIO uses to build sort of a community with many different like social gatherings and like cooking classes and a lot of like weird things like that, which in my opinion was over the top for such a brand new company. They moved away from that in favor of their new NIO spaces, which are much smaller versions that focus more so on just showing and selling the actual products, which I think was absolutely the right move. And I applaud them for it because it seems to be helping improve their sales and still helping them cut down on costs as well. So basically, you have a growing network, higher sales, and better financial performance. And speaking of finances, I think the other major boost to the stock is the fact that they closed a large cash deal for a quarter of the company that made investors less worried about NIO going bankrupt. So that really catches you up on what's been going on with NIO as a company and why the stock has been surging by so much. But is this recent rally in the stock price justified? Well, I think a lot of it probably is. I mean, we are talking about a lot of future potential here for a company that is essentially coming off of record sales now that will improve their financial situation. And so I think a big rally off of the very, very low bottom that they recently hit, I think that is justified. But where does the stock go from here? And as someone who does not currently own the stock myself, would I be willing to buy at these higher prices as the company's performance improves? Well, let's very quickly run through a bearish case of the stock being overvalued right here. And then let's talk about a bullish case based on future potential. And then we'll finish up the video with my overall conclusion and opinion and what I'm going to do myself. Let's go ahead and do that right now. Well, when looking at the bearish case, the easiest place to start is by simply looking at the stock price that has already climbed by so much. Just to reiterate, it's up by close to 500% in just the past few months. That's not an easy pill to swallow if you're someone who doesn't already own it. Now, they've obviously not been profitable yet, so we can't really look at a price to earnings ratio for the valuation, but we can look at a price to sales ratio. And right there, literally just a couple quarters ago, NIO was trading at a PS ratio of less than 1, which is actually very attractive for such a young company that has the potential to see explosive growth in the future. So that was really the time to be buying the stock if you wanted to take the risk. Granted, back then, that risk was obviously a lot higher because many people were predicting that the company would go bankrupt. But if you did your own extensive research, which is what I always preach to you guys, to do your own research and form your own opinions rather than copy what everyone else is doing, and if you truly did believe in NIO as a company, then that was a fantastic time to buy the stock, and I'm sure many of you actually did. However, today, after the huge run up, that PS ratio is literally trading at close to 15, which is insanely higher. And just so you know, a general rule of thumb is that a PS ratio is considered good at around 1 or less, because you're basically paying that same price as the sales being generated at around 1. And that's usually considered a good deal if it's a decent company. But at close to 15, that means that you're willing to pay around 15 times those sales, not even profits, by the way, but just sales that still need to be like reduced into profits. And that's generally not considered very attractive because they would need to see explosive growth just to grow into that valuation over time. To put all of this into some further context, even Tesla is cheaper from this standpoint, while both GM and Ford are as low as around 0.3 and 0.2 respectively. And don't get me wrong, this isn't taking into consideration the future potential of these companies, which we'll talk about in just a second as it relates to NIO in the bullish argument. And of course, a PS ratio is only one tiny piece of the giant puzzle, but I'm just trying to illustrate the point here that NIO stock is pretty expensive as of right now. Now, another issue is that, of course, NIO is still not profitable, losing tens of billions of Chinese yuan over the years. And it's not going to be easy for them to turn a profit when you have so much competition flooding into the market. Just last year, there was close to 500 different EV makers in the country, and given what I call the sort of four-headed dragon of a trade war, the global health issues, subsidy cuts, and strong competition, including Tesla, it was only a matter of time until that EV bubble kind of burst. According to DigiTimes, many of those companies are already going under, with perhaps one of the most surprising casualties recently being Byton, who you may have actually heard of as one of the more popular and exciting EV startups in China, who's now suspended their operations there and filed for bankruptcy in both the United States and Germany, where they did some of their research and development. And that's even after having recently raised billions of yuan to desperately stay afloat. And again, Tesla is really the giant elephant in the room here that I think too many people were dismissing as not a big enough threat. But when looking at recent market share data ever since they entered the country in a meaningful way, building their own vehicles there, Tesla has been quickly gaining control of close to a fifth of the entire Chinese EV market, according to Bloomberg. It's a pretty damn big deal because it means a smaller pie for everyone else. Pretty scary stuff, right? If NIO is not able to stop the bleeding and make significant progress towards profitability, then of course they run the risk of going under, and that brings a lot of significant risk to you as a shareholder because you could lose all your money. And let's just be honest here, Chinese stocks, they are probably not going to be hesitant to screw over international investors if they need to. And so it's not exactly the safest place for you to be storing a lot of your wealth, not just in Chinese stocks, but also a startup company that is losing so much money. So there's a lot of risk there. Now, having said that, it's not all bad news here, and there are actually some good arguments for taking the risk and investing in a company like NIO and holding on to those shares long term. So let's quickly discuss that right now. Well, for starters, the market is gigantic. As of last year, China controlled more than half of the entire global market of EVs, literally beating out every single other country in the world combined. And while there is certainly hundreds of EV makers in the country, the reality is that most of those make tiny, cheap EVs with barely any range and no autonomous functionality. So it's not exactly the market that NIO is trying to compete in anyway, but even then, NIO's overall market share should still be climbing at this point. In fact, when looking at Tesla, Reuters estimated over 11,000 China-made Model 3s sold in May, and I know that's not counting S and X or anything else, but overall the China-made Model 3 is for sure the highest seller for them in the country. And again, according to Bloomberg, it was enough to get them around 15%, even more, market share. Well, in that same month, NIO sold close to 3,500 vehicles. So just by doing some basic math here, we can guesstimate that NIO's market share is probably somewhere around 5%. And while that is certainly very small, there's still two big positives to note here. Number one, it's still about a third of what Tesla is doing, which is actually very impressive considering how much more well-known Tesla is as a brand and how many years it's been around and how large it is as a company compared to NIO. And number two, it means that there's still a gigantic amount of room for NIO to grow if they're able to execute. And like we mentioned before, we know that NIO sales are now rising, and there are actually a few good reasons to suspect that the growth will continue. For one, most economists are actually turning optimistic about China's economic recovery. In fact, many are predicting that they won't even see a recession, which is pretty crazy to think about. They certainly had a big slump in the first quarter, but are now expected to actually grow in the second quarter, which would cancel out the recession definition of 2 consecutive quarters of negative growth, and they're still expected to post growth, positive growth, for the full year as well. Obviously, it's heavily debated whether China's GDP numbers have ever been accurate to begin with, because they've definitely been known to lie about many things. But the point is that some kind of a recovery has at least begun there, and that'll likely help NIO stay afloat and later expand. Second, one thing that NIO actually does pretty well is that they release a new vehicle practically every year to keep their lineup fresh and exciting. I wish I knew more about the auto market or industry to understand whether this is actually a good strategy or not, but the latest vehicle set to release this year is the smaller EC6 Coupe crossover, which will clearly go head-to-head against Tesla's Model Y for what is the largest auto segment in the world in crossover SUVs, and I think it'll likely do very well. And lastly, because NIO has such great partnerships, like the one with Tencent, which is actually one of my favorite Chinese stocks, who recently gave them even more funding, but also strategic partnerships like the one with Intel, they'll be able to utilize those for even more growth in the future. In fact, because NIO has such great autonomous driving technology and functionality, they actually joined forces with Intel's Mobileye to provide them with vehicles for a future robotaxi service. And we all know how lucrative that could turn out to be for them in the future. So add it all up, and there definitely are some really good reasons for being optimistic about NIO's future potential and their growth prospects. But having said all of that, what are my personal thoughts? How do I feel about it? What am I going to do from here myself? Well, currently I believe that Tesla's market cap is around 15 times larger than that of NIO's. So one could say, well, if I really, really believe in NIO's future, and I think that they will eventually become a sort of kind of Chinese version of Tesla and expand globally, then I could hold on to these shares very long term. And obviously, if that's the case, excuse me, there would be a lot of profits to be made on that stock as it grows into that much bigger valuation. On the other hand, NIO is currently nowhere near the size of Tesla, and they certainly don't have the same kind of brand strength and loyalty that Tesla has. And right now, I believe Tesla does around 25 times the sales of NIO. So it's not really comparable. And in my opinion, I just really don't think that NIO will ever dethrone Tesla. Now, here's where things start to get a little shaky, because I personally feel that the future of the automotive market is going to be electric vehicles. And I think it's going to be huge, and I think it's going to really blow up in the future. And I think that Tesla is going to be number one in that global market. And it's the reason why I'm so heavily invested in Tesla stock myself. In fact, it's my second largest stock as of today. Now, having said that, I think that the market is going to be so large that I don't think NIO has to actually dethrone Tesla. I think there will be plenty of room for multiple competitors. And if NIO is able to become kind of, one of the biggest players out of China, then there is a lot of potential there for them to also become a big global player as well. So I do actually like NIO, and I do actually think that they will be successful over the long term. And I've always kind of said that in previous videos, because they have so much potential. It is risky, but I do think that they will eventually be successful over the long term. However, the problem that I have is that I'm already heavily invested in Tesla, which gives me exposure to what I think will be the biggest global player in the EV market, and is already a much bigger player in China than NIO. And Tesla also gives me huge exposure to the robotaxi market when they eventually launch their robotaxi fleets. And on top of all of that, I also recently purchased Baidu stock, which, if you don't know about Baidu, they're also a big player in the kind of robotaxi market, especially out in China. So I don't really have any kind of necessity to be buying NIO stock, especially at these higher prices, which, by the way, I think that the market is pretty overvalued at this point. I mean, we're trading essentially very close to record highs. The economy is still really struggling, even though there are some signs of recovery here and there, but I still think the economy is in pretty bad shape. We're still going through a global health issue, and on top of all of that, in the US, this is still an election year. So I think there's going to be a lot of volatility this year. I'm not sure where the market is kind of going, but I think there will be volatility. And I could easily see a better price coming for NIO stock. So just to sum everything up here, I think that the stock price is just up too much right now for me to even think about touching it. If I already owned it, I would consider actually trimming it a little bit and maybe locking in some profits, unless I was really trying to hold it like very long term and I just really believed in them a lot. But as someone who does not currently own the stock, it's just climbed by too much for me to be buying at these levels. I think the valuation is just too high. Even at like a 15th of Tesla's market cap, I still think it's too much. And I think that we're going to be going through a lot of volatility in the market, and I think there probably will be some better prices, but I could be wrong. Who knows? We'll have to see. Either way, though, it's definitely a very exciting company. I want them to be successful. I really enjoy tracking them, and I will continue to make videos for you guys, because I know some of you are already invested in it, or you guys like hearing about it. So anyway, I hope you guys enjoyed the video. Thank you so much for watching. Hit the like button if you did enjoy the video, and I will catch you guys in the next one. Leave your thoughts and comments down below. I'll try to respond to as many as I can. Let me know how you feel about NIO. Okay, guys, I'll see you later. Take care. Bye-bye.